Hi, and welcome to the Stock Scores Market Minutes for May 14th, 2018. This week's topic, hot stocks leave clues. And then, of course, I'll do my regular weekly market analysis and the trades of the week that are related to this week's topic. The basis of my approach to finding hot stocks has been essentially the same for about 20 years. It started with a class that I took in university all those years ago that was focused on insider trading. Now, in that class, we studied major acquisitions in the stock market and the evidence in the market that there were some people trading on inside information that were able to predict the big price moves of these stocks that were being bought by other companies. And what we found is that the majority of the time, there were people trading on information that was not widely known. And I will tell you that the market is not a lot different today. There is always someone that knows more than the rest of us. And when those people have that predictive information, they act on it simply out of greed. Now, in doing so, they leave a trail for us to follow. And I created an indicator, which I call the Stock Scores Action Candle, to follow that trail. Now, when we get into this week's Trades of the Week, I will show you the action candle and how it was predictive for the top 5 performing stocks of this past week. But first, let's get into this week's analysis. Here you can see the S&P 500 has broken through that horizontal resistance. Of course, it broke the downward trend line more recently, built a rising bottom, broke this flag. So we've got good upward momentum this week after a lengthy period of sideways trading. You can now see that there are good rising bottoms and we have a new upward trend line. Now that, of course, is the short-term chart. Let's take a look at the longer-term chart, which also has a positive pattern because the long-term upward trend line has held and the short-term pullback line has finally been broken. So given that we've broken that pullback line that has really been building for 3 to 4 months, the signal now is that the market is likely to move higher. Now, how much higher? Well, it probably gets up to that resistance level and then it will get stuck. And I think generally we're destined to be sideways in the market for a while, but in the shorter term, that is the next few weeks, we should see the market move up. On to the Russell 2000, which of course represents the small cap stocks in the United States, and we are building an ascending triangle pattern. You can see that there's a lot more volatility over here on the left than we have over on the right, but there's still lots of compression of volatility that can happen. By that I mean the trading range is going to get narrower and narrower as we move to the pointy end of the triangle on the right. Now ultimately what we want to look for is they break through this resistance level, which we have risen up to and will probably get stuck at in the near term. So I think that the large caps are likely to outperform the small caps as the small caps are facing that resistance level. Now, if they can break out through it, great, but that's probably not what will happen next week. On to the Canadian market, which you can see looks pretty strong. Again, this is the short-term chart, but there's our upward trend line, and it's now getting steeper, which means we're getting a bit of a motion. This is mostly on the back of the strength in the energy sector, but also some speculation that NAFTA will be resolved without too much damage to Canada. The basic gist here is that the buyers are in control of the Canadian market in the short term. We can't say that in the long term because the long-term chart for the Canadian market is stuck in this sideways range. So yes, we probably have a little more upside until we hit resistance, but not considerably more upside. And ultimately, we're going to have to stall at that resistance, trend sideways for a little while, and then maybe break out, especially if oil can continue to be strong. The TSX Venture has been in a downward trend for a number of months as the excitement around the cannabis sector has quieted. However, we did break that downward trend line on Friday, and we did so from a rising bottom. And that tells me that the buyers are getting interested again, so you might want to start looking for some opportunities on this Canadian microcap market, the TSX Venture. On to the Treasury Bond ETF, TLT. You can see that we are in a downward trend. We have held support, which you would expect, but given that the trend is down, I expect that this chart will eventually break down through that support level. Until it does, I wouldn't become too bearish. But if it does, realize that the interest rates in the US and really globally will start to rise, because the US Treasury bond market is a good proxy for global interest rates. And so if we get that breakdown through this support level, when the prices of bonds go down, interest rates are going up. Onto the US dollar, which has had a pretty good run over the last month. It broke the downward trend line from a slight rising bottom. It's now coming into some resistance here. Didn't quite hit it, but we did close the week below the open. So that tells me maybe we pull back a little bit. I think that we're in the early innings of a turnaround in the US dollar. It's got lots of work to do still, but at least that downward trend line has been broken. And so looking out perhaps months, I think that the US dollar could be higher, but perhaps next week it could be lower. On to gold, which of course is heavily correlated to the US dollar. And with the strength in the US dollar, we've seen gold show that weakness. Gold has been stuck in this sideways trading range for a long time. And until it can break through that resistance level in around the 130 on the GLD, which is approximately $1,300 on gold, I wouldn't get too bullish on it. And I would shy away from gold stocks unless they're really showing signs of alpha. On the oil market, we continue to be in an upward trend, which is now approaching a year in length. It's about nine months so far. And it looks like it will continue until we get a break of that upward trend line. I remain bullish of oil. It's got some upside to go until it hits that resistance level. And so generally optimistic outlook for the oil market. This is an interesting chart because it is the chart of fear, and fear has broken through support. And that implies that the VIX is going to start to move down again as investors really gain more confidence about where the market is going. Less fear, less buying of insurance through the futures market for the S&P 500 futures. So my ratings then, I've upped my ratings for the US stock market to bullish on both time frames. Canadian stocks remain bullish short term, neutral long term, because we are under that resistance level and not in an upward trend. Gold neutral on both time frames, and oil bullish on both time frames. The US stocks have broken the pullback trend line that began in late January, and that sets up for a continuation of the long-term upward trend. Canadian markets continue to move higher on energy and NAFTA hopes. Oil is strong, gold remains stuck, and fear is declining. All right, let's look at the trades of the week. And what I did is I went into my TradeStation platform and I just did a search for the top performing stocks over the last week. And this was one of them. This is the top performing one, in fact, here. Now, what I want everyone to notice is the pink dots on this chart. Anywhere you see a pink dot, that is the stock scores action candle. It measures really enthusiastic buying pressure. Now, I talked earlier about how the market tends to predict big news before it happens. Why? Because some people have better information than others. So if we see abnormally strong buying pressure, it implies that someone or a group of people are buying that particular stock with enthusiasm because they have better information. They are speculating that there is good news around the corner. So anytime you see a pink dot, you have to wake up and take a look at it. Well, here is the first pink dot on HEAR, that break on May 8th. And then, of course, that was at around $7. We finished the week at 16. So that's a huge jump, big gap up there, and continued higher on Friday. On to the next one, ARMO. There it is, the action candle right there, which came 2.5 days before the big gap up, I assume on some sort of buyout news. That is from $30 to $50, a 60% gain. On EOLS, we see it again. There's the action candle that predicted this big move higher. The trading desk, TTD, there's the action candle 1 day before the big gap up. And again, my hypothesis is that there were people buying it aggressively with volume because they had better information than others. And finally, BLNK, another hot stock this week. There's the action candle, started the upward trend, a move from roughly $3 to $6 in the course of just a few days. So the point is, follow the abnormal activity using the stock scores action candle. We can do that with TradeStation and the stock scores indicators for TradeStation, or we can do it with the Stock Scores website, which has some filters in the market scan tool for the abnormal activity as well. I've got some upcoming events that are free to check out. If you want to participate in those, go to the upcoming events area of the stockscores.com website. If you enjoy this content and want more, please subscribe to the channel. Hit the little alarm button so you get instant updates. And hopefully, if you like this video, click on that like button, and I'm happy to do more. Have a great week in the market and trade well.